these kind of growth things, population growth, job growth, they are not phenomena that start and stop every 12 months. They are long-term trends where places are either growing over the long term or they're shrinking over the long term.
Hi, everybody. David Milan, Director of Investor Relations with Nighthawk Equity here. Thanks so much for joining us today. Today, we'll be talking about an important yet easy to understand investment strategy, the 3-2-1 investment strategy coined by our very own Drew Niffin. Drew, how do you come up with this strategy and what does it entail?
Thanks, David. Yeah, the 3-2-1 strategy is just think of a rocket launching off, right? In order to launch, it has to have a phenomenal amount of energy. And I think that's pretty similar to what we're trying to accomplish here in apartment building investing. So 3-2-1 growth is simply this. When we're looking for great markets that have great returns, risk-adjusted returns for our investors, we're looking for a couple things. The base layer is three things. We want to find population growth, job growth, and income growth. We want to find places where that's happening. Where are people moving to? Where are their incomes going up? And so we're going to canvas the world looking for those things. Now, when we see those things on the first layer, then the next layer is likely to happen. The next layer is we're looking for cap rate compression and we're looking for rent growth, right? And those things will sort of naturally happen. When there's a market where people are moving into there and there's huge population growth, that's going to lead to cap rate compression, which is buyers fighting over assets and being willing to pay more for a property that is an area that's growing. So that's the cap rate compression. And then again, we have rent growth. So when there's tons of people moving into a town, they're going to be fighting over, I want to live in this unit. And that's going to bid up the prices of rents, right? So then we have, that's layer two. Then when you get layer two all set up, we get to our top final layer, the IRR growth, or the growth of your investment. That's what we're all looking for. When we get cap rates going down and we get rents going up, that is the magic formula for the return on investment going up. So 3, 2, 1 is how we get growth in this industry.
Yeah, that makes sense. Now, looking at that first layer that you talked about, the 3 growth factors of a market, let's talk a little bit more about that. Do we look at year-over-year growth, 3-year trends, 5-year trends? How far back is best to look? In addition to that, for job growth, what other metrics can kind of help us besides unemployment rate?
Yeah, you want to have a mixture of short-term, looking back at the short-term and the long-term. We generally don't want to get too caught up in what's happened in the last 12 months because, for instance, there might have been a global pandemic that affected rents a lot in the last year. But if you look back 3 years or maybe 4 to 5 years, some of the noise in that data gets smoothed out. So we tend to look 3, maybe 5 years out at these trends. The other reason is because these kind of growth things, population growth, job growth, they are not phenomena that start and stop every 12 months. They are long-term trends where places are either growing over the long term or they're shrinking over the long term. So that makes us want to look out a little bit farther in time. Then to your second question, for job growth, we're looking at specific industries that are showing signs of growth in that particular area. So one of our hot markets is Huntsville, Alabama. They're really big in the aerospace industry. So we're going to be looking at job growth in that space and see if that can help us with the economic development that creates that stable job growth that we're looking for.
Well, there you have it, everyone. When you're feeling overwhelmed with analyzing a market, just remember the 3-2-1 method to help you out. Once you've narrowed down your search to a couple of key markets and are ready to take the next step in analyzing a deal, please be sure to use Michael's syndicated deal analyzer, which can be found at themichaelblanc.com/syndicated-deal-analyzer. Thanks so much for tuning in, and we'll see you next time.